Hi, this is Olly, and this is a ELI12 Gamestop video. I'm an individual investor. This is not financial advice. I recommend you do your own research and get educated. Talk to a registered financial advisor. Everything you hear here is my own personal opinion and is completely biased based off of what I've read and the life experiences that I've had. On with the show. Hey, welcome to Olly's channel, where I'm doing an ELI12 on reverse repos. So very first, I'm going to explain reverse repo real quick here. Imagine you have a gold bar and no cash. You go into a pawn shop, you go, I will give you this gold bar that's worth $2,000. You give me $1,000. I promise to repurchase it for $1,100 in 1 month's time. What you just did is a repurchase agreement. You agreed to repurchase your gold for a higher price than he paid for it right now. You have cash. He has something, if you don't come to collect, that he can sell for way more than $1,000. You had a repurchase agreement. What the pawn shop has is a reverse repurchase agreement. So if it was to be reversed and the customer creates a reverse repo, the customer would come in and the pawn shop would say, hey, I need some cash. And the pawn shop says, I will give you this gold bar for $1,000 and I'll buy it back from you for $1,100 in a month's time. The customer's like, sweet, I can handle that. And they go and they hold on to a gold bar and they come back and they instantly make some more money. That is essentially what's going on in the markets right now with the banks and the Fed and the repurchase, the reverse repurchase. Back a while ago, a decade ago, we had the repo crisis, which meant that banks had not enough cash. And so they were handing over their treasuries, their bonds, their gold, anything they could to get hold of cash because they were cash short. Now, what's happening, because we're in a reverse repurchase, the government and the Fed have created so much money and they've dished out so much money to regular people with all of these stimulus plans. There's more money in the banks than they can handle. And money to a bank is a liability. It's not worth money for them to store it. Weird thing because of market mechanics at the moment. So the banks right now have too much cash and not enough of the AAA rated bonds, gold, treasuries. Essentially treasuries. We'll use treasuries. So the Fed has something like $4 trillion worth of treasuries. So all these banks that have too much cash right now are going to the Fed and are trading that cash for treasuries so that they can back themselves in the market with all of their margin that they have. They're backing and covering those margin requirements with AAA rated securities like gold and those treasuries because cash doesn't cut it to cover those securities anymore. Thanks inflation and all the rest of it. But that's what's going on, is that the banks have too much money. They're trying to offload money from their books and get hold of treasuries because treasuries are in super short supply right now, but the treasury has a big stockpile of them. So that's my understanding of what's going on. In the last year, you can see here, this is the reverse repo for the last few years. As you can see here, it's not all that high typically. More recently, you can see that it's jumped quite a lot. Now, the interesting thing is here in, this thing's tricky, June, when it gets just above these old records here, we started to have some pretty interesting things pop up, and I'm going to reference this particular DD by Aced Vector. This is about 6 months ago. But one of the things that he brings up, and if you read this DD, he gives you a bit more of a rundown of a few things that he thought were a bit more connected. But one of the things I want to check here is people were waking up around that time when it first started to set new records with, say, a $50 billion debt in their bank account. Quite a few of them showed up, and these are really massive glitches to have occurred. We got some people that have explained it, a few other people from the industry saying that you go and check all of these computer systems so thoroughly that nothing like this should ever get through. And to top it off, apparently we had the world's first trillionaire was some random guy from Georgia. He woke up with quite a balance in his account, his crypto account, that was around the same time as we really started setting records with the reverse repos. So that's my understanding of the reverse repo situation for right now. I don't think it has all that much to do with GameStop, but it's something that people were talking about there. And in regards to could this bring down the entire system and like the house of cards, I don't think this on its own will. It will actually cause a bunch of other problems. If you want to know more about the reverse repos and repos in general, I highly recommend this YouTube channel, Steven Van Meter. He's the Bond King. And if you put in reverse repo into his search, you'll find quite a treasure trove of information. This guy's extremely intelligent and he likes to lay things out pretty well. So go and take a look at his videos. As you can see here, the Fed will crash everything by trying to save the banks. Collateral shortage, which was 5 months ago, right when the reverse repo started going up. The Fed caused that collateral shortage themselves. How that shortage is going to threaten financial systems, you can find quite a trove of information here with Steven Van Meter, highly recommended. So that's my ELI12 for apes on reverse repos and how it doesn't really tie into GameStop, but it's something a lot of people have been asking about, so I decided to throw something up. Know it, Ollie out.